Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It is still Sunday in my time zone. We're going to call this Setup Sunday. Markets are closed tomorrow in the United States for President's Day. Historically, a great time to get a mattress sale. Bitcoin, of course, remains open 24/7. Last week we had 2.265 billion with a B USD inflows into spot Bitcoin ETFs. We are above every single trend metric you can think of, every moving average you can think of. Am I bullish? You better believe I'm bullish. It's going to be hard to hold price down when we've got inflows that look like this. Let's say inflows are down slightly, okay? Next week, the week after, let's say the GBTC selling before Gemini buying has an effect on price, okay? One thing to keep in mind here is not everybody can access this stuff yet. We're still getting connected. TradFi super siloed. You're either in the club or you're not in the club. That's going to take a little bit of time. So it's almost surprising that we've seen the type of flows we've seen already, right? So this trajectory is extremely healthy, near term, midterm, and beyond. If we compare this to 2020, and this is from ByteTree, they have all of the ETFs globally. But if we compare this to 2020, 90-day time window here, we look very similar as far as inflows into these funds, ETPs, ETFs, ETNs, whatever, globally looks similar to this period of time, which I believe was mainly GBTC, mainly levered. This is real money. This is not stable coins. You can't blame it on Tether. You can't blame it on GBTC. You can't blame it on degen gamblers, okay? This is real deal money coming into these ETFs. So that is super healthy for the long term. One thing to obviously pay attention to this week is NVDA Earnings. They're the biggest company that everyone's trading, watching, AI miracle, superlative, whatever. But that's Wednesday after the close. I only mention that because if there's anything that can stop us in the near term, it would be legacy bearishness on the indices, which are mainly Mag 7 and realistically mainly NVIDIA at this point. It's kind of the last man standing. I'll talk more about legacy on Monday, but that's just obviously something to be aware of if you're in 100x long, right? Wednesday after the bell, you may feel some pain on a wick on BTC because we are pretty connected to legacy volatility. Just something to keep in mind. I think this is the chart of the week as far as what to watch. I really do not like trading megaphones. Peter Brandt, in a sense, was correct when he says diagonal lines are a scam or whatever. He doesn't like diagonal lines. I'm not going to disagree with his take, but it's just hard to know, technically, have we hit support here? Probably. 50K is a nice psychological number. If this trades similar to the SVB megaphone that we had in early 2023, you would measure it based on the depth higher. That brings us to a target of 57 to 62. I really like that we are consolidating at the yearly pivot, just below the yearly pivot. We survived the weekend. If we're surviving zero flows at 52 and we have another 500 million a day next week, I have a hard time thinking we aren't higher. So the technical's already leaning slightly bullish, I'll say, based on the megaphone pattern, which admittedly, I've traded maybe 3 in my life, okay? But it looks okay. Something else I was also mentioning last week is this ascending, broadening wedge megaphone. This may also take us to that level, that same level eventually. Generally, these are not bullish. Generally, anything rising is bearish, and typically you see exhaustion, which we have. This is the 4-hour. We've seen this bear div hold us here, right? We've seen the yearly pivot for whatever reason. I love the yearly pivots. Market somehow knows they're there. Okay. You can see how crazy this just back and forth has been at 52, but so far so good. RSI, I will say, has reset. Okay. Based on the divs, it has returned to 50. Ultimately, what I'd love to see with our RSI and resetting a div is all the way to 40, 30, whatever it is. I don't think we're going to see that, but this looks good. If I had to choose between this or breaking and I'm bullish, obviously you prefer holding at the yearly pivot. So This could still play out over time as a bearish move. This could still be a bearish div over time. It's just unlikely if we see another push strong higher. I mean, another thing you could say here is maybe this is a high and tight flag. It's just hard because we've had, 9 straight candles or whatever this is. And now we're just kind of chilling at 52. We're above the daily cloud. We have a bullish TK cross, bullish cloud. Looks great as far as that's concerned. The cloud would suggest bids at 45.7. That would be the 50% retrace of the range. Like I've said previously, the last move higher, we didn't really tap the Kijun until the very end, the red line. We did tap the Tenkin multiple times. So if you want to be more aggressive with bids, maybe that's where you like to live, as the Tenkin is going to move up quicker than the Kijun, the red line. Trailing stop losses here are super high, 50.5. Again, these print based on high, low, high. That would be the support fractal. The resistance fractal, unsurprisingly, is also at the current local high. So that would tell you any higher high there, you're adding to your long based on Williams fractal and Williams alligator criteria, which I don't have on here, but that's also bullish. Okay. So collectively, what this is saying is you're adding at 52.5 with the trailing stop loss at 50.5. And if the trailing stop loss gets hit, you want to look to get back in at around 45.7. There's a ton of channels here that we're kind of teasing the top of, which is another reason. Like, I don't have a great outlook for this week. I just assume we're bullish because we have crazy bullish inflows. And if we start to really kick things off here, we're going to break through a bunch of channels, a bunch of pitchforks. It would suggest a hastening of the move quickly, approaching parabolic type activity. If this channel is invalidated in a bullish direction, right, that would suggest a faster rate of change. We are already above the 2023 pitchfork, which was great for 2023. Similar to 2016 and 2017, during that period of time, we held in tightly in a pitchfork. And not till the very end, when the retail Thanksgiving crowd came, that's when we sort of saw the parabolic advance to the top side. You could probably redraw some sort of pitchfork here, but I don't like to play around with it too much. Obviously, this was the channel we were living in, and we tried to break down and just couldn't. So at the moment, it looks as though this very much wants to go higher quickly. If we fail, let's say, we break below the daily cloud, break below all supports, what you'd watch there would be, how do we react on the midline here, which was, 38K, whatever that is. That's the flip side to this argument. But where we sit now, extremely bullish. You could even probably draw this, which parabolic banana, call it whatever you want, right? I mean, this has been sort of floated by a few people, but this looks very bullish, clearly. I have parabolic SAR on here. I'm not going to explain that. I doubled the default. I've probably never said parabolic SAR on this channel before, but I was just trying to poke around to find an indicator that would maybe help decipher this move and whether or not we have support, we have resistance. You can see over time, we sort of burn off resistance. Over time, you sort of burn off support. I'm not going to go into the indicator, but this looks completely fine to me based on what I'm seeing. And even on back testing, just a quick eyeball check. Looks really good. So no complaints there. And if we zoom way out, there's also this weekly channel, multi-year weekly channel that we're trying to get above the midpoint of, with a top end around, 150, 180, 200 eventually. Based on having, we are super early, right? People talking about left translated cycle. I don't really care. All I know is we have a ton of inflows on the ETF side, and that's definitely going to help us go higher. Long term, I like the power law corridor as the guide. I'll put all the links to this in the description of the video so you can play around. But, again, it gives you some sense, like, where are we potentially a year from having? Somewhere around 400,000, 300,000. It's a wild target on the top side, right? We didn't hit those targets last cycle, but it's just something to consider when you're, hemming and hawing at 60K, whether or not to close your spot position. My opinion, probably best to maybe keep most of that open, right? If we look at the 20-week moving average, in a bull or bear trend, we stick above or below that for the most part. We don't really dance around it. We're holding well above it here. And so the next question is, are we overbought relative to this key moving average? We can look at that mathematically. We are certainly elevated. We're above that moving average. Post-halving typically is when we see the most overbought condition relative. This is like bubble stuff, right? 180% above the 20-week moving average. So as maybe overbought as it feels relative to these weekly moving averages, it's okay, right? Looking at the 200-week, you can also do that. Just some gauge, right? Just because when things get wild, it's hard to really get a clean read on how bullish we are. So this is just a good mathematical eyeball check. And just as an example, because we have these great examples, if you're unaware, super microcomputer, crazy move for the past, 6-7 weeks. Similar to NVIDIA, it consolidated for a while, good long while. NVIDIA was longer than this, but it broke out of that consolidation. And it's been good night ever since. Now we have this shooting star candlestick. I didn't touch this, I didn't play this, just to be clear, but looking at distance from the 200-week moving average, this is an all-time high for super microcomputer, so that would give you caution. Even last week, the prior week, it was also at an all-time high. So when we start to look like this on a relative basis, that can be an issue. Something else to just peek at is the cloud on something like super microcomputer, because what you'll notice is an extremely thin cloud, extremely tight TK lines, and TK lines that are basically just straight up, right? Because momentum is above a 45-degree angle, and the cloud has a hard time with that. The cloud got you in all the way back here. Cloud got you in, where you'd expect a trend indicator to get you in at the right time before the breakout. And for this particular chart, 653 would be the support. But it's just something to think about as we approach charts that potentially will look like that on the crypto side. NVIDIA is another one, just looking at this distance, the 20-week moving average. This is historically elevated, right? 40%, 38%. It's about as far as it typically gets. It got a little farther, Q4 2021. There's also a spinning top up here, which means buyers and sellers coming to an equilibrium, potentially look for a reversal. We have earnings this week. Again, this is all sort of lining up to waiting for an answer. The market's waiting for something. But as it stands here, this does look fairly overbought. And the daily on NVIDIA, again, just to play with the cloud, 600 would be the support. So it would be interesting if, let's say, earnings aren't as rosy as people think, and we get some crazy move on NVIDIA. Comparing Bitcoin to some other charts real quick. Again, it's hard to be bearish when we're just crushing everything, right? This is TLT, all-time highs, right? Now, some of these direct comparisons maybe don't make sense or aren't the best, but when you're just looking at these charts, and maybe you're not in crypto, I think you'd question, what's really going on here, right? like why are we outperforming TLT by this much? Something to think about. Bitcoin versus gold. Again, not exactly the best comparison, but if I'm looking at this chart as a gold holder, I'm thinking, what am I doing with my life, right? Yeah, gold's going to move eventually, but I want to be alive to see it. So Bitcoin may be the better option. Bitcoin versus M2. I mean, what do you even say, right? We are at levels maybe that you wouldn't expect just looking at price when you compare to some other stuff here. M2 is the money stock of the world, and that's also basically all-time highs. Bitcoin against the S&P. If you are a money manager trying to beat the street, trying to beat your peers, one way to do that is to find things that outperform the S&P. And again, we find ourselves in this interesting channel, clearly outperforming, have been for many months. The question is, do we stop here or do we, sort of blast off to all-time highs and beyond? Post-halving in 2020, when we got a lot of eyeballs, we really gained against the S&P. And if we look at the QQQ, same thing. None of this looks overextended. None of this looks, bubblicious, as I've seen 10,000 of those charts this week relative to Mag 7 and Bitcoin on that chart. It doesn't look like that to me. It looks like we're just headed for higher highs. Bitcoin against NVIDIA with the cloud also showing signs of potential bottom here with a bullish TK cross following what has been years of losing against NVIDIA. So if we even want to take the most extreme example, we're starting to get a foothold there. And as you can see, post-halving is when we tend to do best against NVIDIA. So we're lining up very similarly. Moving on to alts for a second, total 3 against BTC. You know, if you like alts here, you better hope that this is not a descending triangle, okay? If you like alts here, you better hope that dominance is not an ascending triangle, because it very much looks like that. It very much looks like dominance wants higher and total 3 against BTC wants lower. Total 3 is everything minus Bitcoin minus ETH. So broadly as a group, this would suggest total 3 may have continued weakness against Bitcoin. Towards the end of this video, I'm going to talk about some USD plays for alts, but on a relative value basis, just keep in mind that may not be the best option, okay? I don't care what you trade. I'm just looking at the charts. Dominance, I like to potentially 60, just based on this. So dominance continues to look strong, and as I've said before, does your alt have an ETF? Probably not. Looking at ETH finally making its way to the top of the weekly cloud here. Ascending triangle pretty much has played out at this point as expected. It took a good long while, let's be clear, right? But it did get there, the edge to edge did get there. At this point, it's well within its expected range based on the weekly. Unlike a Bitcoin with the megaphone, ETH has a different, it's like broadening, right-angled, ascending, something, something. Also a pattern we don't see often. But if this breaks out, again, you're just using the depth. You're taking the diag as resistance, measuring it to support. This would give you a target of 3,200 to 3,500. And I'd imagine that would be in short order if Bitcoin breaks to 60. And if you want to zoom out on ETH, you know, if you want to get all bulled up on ETH USD, this is the chart. This is exactly what you want to see. You are in the bottom of a multi-year pitchfork. You are below the bullish side of the pitchfork. You survived at the very bottom. Literally the moment you'd expect the ascending triangle to fail, you would have expected this pitchfork to fail. It did not. Okay, so this immediately tells me to look for the midpoint of the pitchfork. That's how this works. That's why I use these things. 5K, which I think would be an all-time high, right? I think 4,800 is the previous all-time high. If you want to draw this yourself, you just pick these 3 points back here. In 2019 and 2020, I like that it includes the COVID low even. So this makes a lot of sense to me now that it has survived the low. I mean, this is perfect, right? Also something to keep in mind with that Bitcoin pitchfork, even here on ETH, you can see how we held above it for a year, right? But eventually we came back to that midpoint. So these high time frame pitchforks are pretty useful even after maybe they get invalidated one way or the other. There's also the ETH rainbow chart. If you want to play around with this, just shoot from the hip target. This cycle, I like 10K for ETH. I like 300K for Bitcoin. You know, those are my targets, right? But again, I'll put this in the description of the video to play around with. ETH BTC, to me, still bearish. Could this be the bottom? It could. Could ETH ETF speculation help ETH BTC bottom? It could. But I think you're betting on two things. You're either betting on BTC ETF flows, or you're betting on ETH ETF speculation. Approval speculation, to be clear. Okay, so if you think BTC flows are going to be stronger than ETH speculation based on the ETF, ETH BTC should hold at this level or go lower. If you think it's ETH's turn to catch up, Sol had a move, alts broadly-ish had a move, right? Then you're leaning towards pro-ETH over Bitcoin here. I still think broadly on trend, you know, it's not a question the cloud is telling you. You're still bearish on trend. And additionally, you are also ranging. You're in a 3-4 year range at this point. Now, this is a pretty massive range trade, to be clear. So you could buy the low, sell the high again if you wanted to, but things are not super favorable based on trend just yet. Moving to Solana. Solana is a tough one because it's moved a lot. There's still a lot of retail interest. There's still a lot of reasons retail's using Solana. UBI/airdrops is what I call it. Just spec, right? Tons and tons of casino spec. You're basically buying into the casino by playing on Solana. The problem here is on the tech side, the top of the cloud is at 140, the yearly pivot's at 150, let's just call it. You may see a little bit of a limited move here relative to ETH, at least in the near term until May, until after halving. You know, I don't think Sol's going to necessarily stop at 150, but I do think it may underperform Bitcoin and ETH until after May, let's call it, assuming the ETH ETF gets approved. One thing on here that many people are kind of pointing to, this mega either cup and handle and or inverted head and shoulders here that I don't have drawn in, really scrawny shoulders, really short shoulders, but sure, that's fine, right? Like just take the depth of this and measure it higher. You're going to get some crazy target. Completely possible. But in the near term, I'd watch to 150. On the daily, cloud also likes it. It is above the daily cloud, bullish take across. This could be setting up for its own little miniature cup and handle, which based on cup and handle rules makes more sense than that broader cup and handle. But this also measures to basically the yearly pivot at 150. So if everything is bullish this week or next, depending on how long this takes to handle out, that's what I'd watch for here. And 119 would be the breakout trade. Something else you'll find in the reading is the tighter the handle. So if this does not go to the 50% retrace, the tighter the handle to the resistance level, typically the higher the breakout. So if this does hold the lows, I would expect 150 on this pretty easily. So I think that's a great little trade to watch this week. As far as, Sol ETH does not look favorable to Sol at the moment. If you want to put on your cloud edge-to-edge glasses, this would be a bearish move for Sol ETH, potentially to the bottom there. If it loses the yearly pivot, that favors Sol very strongly. Sorry, it favors ETH very strongly relative to Sol. BTC also similar here in the cloud, potentially through the cloud over time, and definitely does not look like, a cup and handle here, right? So that was Bitcoin, ETH, Sol. And now we get to the fun part of the video for some of you who just, this is where you live. You live in Altcoinville, population EU, and you just love this stuff. So let me take a look at a bunch of these. You can see it at the top of the screen. There's a lot of these weekly cloud setups. I wouldn't bet the farm on. I wouldn't 100x leverage, not financial advice. Okay. But these are starting to line up based on technicals for potential moves higher. The coins themselves fundamentally are dubious, should not exist, have tons of baggage. I mean, look at Waves. I'm not even going to go into that story, but all I'm looking at here is the tech. What I'm looking for is a bullish TK cross with price closing inside of the cloud. So Waves, not quite there. But what I also like about these charts is we've seen 1 to 2 years of sideways ranging potential accumulation. For all these charts, I'm not going to say it out loud, but do I think they can go to the top of the cloud? I doubt it. Okay. But look, did people think in 2021 that Waves could go back to 11? I don't think so. Waves to 30 or whatever this is from 2, maybe. One way to play these as well, additionally, on the trade setup side is, let's say you throw $500 at this, okay? When it's doubled, when it's at, let's just call it 5, when it's at $5, you take out your $500 and you just do nothing with the rest of it. You just let it ride. You just let it go and you see what happens. For some of these alts, they may just fizzle, they may get delisted, and some of them will surprise you. So that's my dad pitch for these. But yeah, Waves looks fine. Sure. All these again have some sort of triple bottom something here, right? This is a mess, but yeah, sure. Why not? ALGO. Sure. Why not? Right. Doesn't have a bullish TK cross yet. Maybe this is a ugly inverted head and shoulders, massive percent move, right? That's all I really care about here. If I'm trading an alt, okay, it has to be the most insane setup, right? So like this. Could ALGO realistically, based on its market cap, go to $1.50? I don't know. I don't care. All I know is this is an edge-to-edge potential setup. And again, throw some money at 20 cents or whenever this gets into the cloud and sell half on a double and just let it do its thing. Filecoin, plenty of people talking about Filecoin. Okay, there's no shortage of people talking about Filecoin. Some will say correctly that I was early on Filecoin. Been talking about it for a few months. Arthur Hayes recently wrote a blog post talking about Filecoin. Again, this is bottomy type stuff. When I say charts that look like this, you tend to see stuff happen, right? Whether it's positive news, whatever, right? It doesn't really matter. This could go to 36. This could go to 60. This could go to 120. Realistically, could it go to 120? Probably not. Okay. But this is the type of chart, if I'm going to take a swing at, that's the type of chart I want to see. ETC, same thing. It shouldn't exist, but it does. Looks great on the cloud. ETCG, The Grayscale trust is still at, I think, 45% discount. So if you really want to play this, maybe you look to that chart. Okay, but this thing has done nothing for years, right? But it's starting to turn a corner based on trend. Doge, same thing, basically flat for 2 years, kind of left for dead on meme coinery. And, you know, again, the market cap, blah, blah, blah. I get it. This can't go to 20 cents because of it would be the biggest coin by market cap or whatever. I'm not going to disagree, but there's a potential for a trade setup there. Flow, this one's a little farther back time-wise. You know, for some of these, I'd probably wait until post-halving, but just to add them to a list. This is an NFT chain. This has problems according to the SEC, right? Like there are issues with all of these charts. Sand, same thing, needs more time. Sure, why not, right? Can this go to 4? Probably not, but it probably does pretty well. Wi-Fi, the coin, speaking of things that shouldn't exist as we get into Dino DeFi, this thing has been sideways for 2 years. Probably looks pretty Wyckoffean at this point, almost in the weekly cloud. Can this go to 25,000 or whatever this is? I don't know. Okay. Would I trade this? No. Okay. But the cloud says, sure, why not? You know, I trust the cloud. Uni, the token is garbage. Okay. Doesn't matter. Still looks good on the cloud. Top of the range. You know, anything up here is fair game. 16, 18, 24. I don't know. Looks pretty good. Generally, SUSHI, same thing. There's a horizontal resistance line here at like 160. But, you know, if I had a choice, would I trade SUSHI or Wi-Fi? I'd probably trade SUSHI. Or even over Uni, I would trade SUSHI. Just because the retail crowd is probably more focused on the unit bias of something like SUSHI because it's less than $2. Comp also looks very good on the weekly cloud. Where does this go? 200, 260? I don't know. It looks good. That's all I know. FET. Now, as we approach FET and STX, these are different because they are above their weekly cloud. They have all sorts of bottoming patterns here. They're approaching all-time high levels, right? So you can sort of barbell it. You know, look for charts that look like this, where they were in a range for 2 or 3 years and are at the top of the range above the weekly cloud. This looks great. Why not, right? It's got AI in its title. Why not, right? It's below $1. Love it. STX, Bitcoin adjacent, above the weekly cloud. Looks good. So if I still have you after whatever many minutes this has been, thanks for watching. Like, dislike, comment, share, subscribe. Lots of ways to play this market. Hard to be bearish, as dangerous as that is to say.